Happy Friday. It's an interesting one. It's an exciting one. We still have to relay the facts. Market is acting squirrely. It's not very comforting. The big hole today, though, the cryptocurrencies finally cracked and created a big hole in the fabric. Those cryptocurrencies, the investors, I should say, in crypto, lost about $1 trillion today. So there's a big hole in the fabric of the market, a big hole in the confidence of the people. And so now everybody's running around and they're concerned, and the markets have begun to break. The Standard & Poor's yesterday, the Dow today. So I can comfortably say, according to our message, we're in correction territory. So the bull market is in a spot of a correction, whether it's a 1 week correction, 1 year correction, can't tell. Don't feel that it's going to be a year because the world moves so quickly with communication. It may be quick and dirty, over sooner. Our portfolios, as you all know, are conservatively structured. We have been selling things that just don't appear to be working out, and we have a lot of cash. So we're already in the conservative vein, and now that the markets are technically in a correction, I may cut some more risk out early next week because we want to control that risk while the market's finding a bottom. The good side of this is good companies, good stocks are falling. Okay, so, and they're mostly growth stocks, because behind all of this is the chairman of the Federal Reserve that promises to raise interest rates 3 times this year, attempting to fight inflation. Now, whether that's the effective tool to do it, and whether we've got that kind of inflation, a monetary-induced inflation, that's something else again. We don't think you do. But nevertheless, his plan of raising interest rates creates images of recessions and the market's earnings going down, or the rate of growth of the earnings going down. So the measurement for those earnings, the price-earnings ratios, are going down simply because interest rates are coming up. So this is just one big corrective exercise. It doesn't feel good from day to day, from minute to minute, but it feels better because companies are getting more attractive all the time. And you know, it's very difficult to employ money and buy things at a high when things are very rich. And it's much more palatable to buy things at a bargain basement. Well, we're not at the bargain basement yet, but we're certainly not at a high. So the market's in that corrective phase, and we got to look out for the bargain basement ahead. So we'll be watching it closely, and we'll be also trying to manage risk while we're watching. But hopefully our game plan and our patience that we've had to bear through for several months seems to be coming our way. So have a good weekend. We're at the switch, but understand that market things are getting pretty squirrely. It's going to be interesting ahead. Thank you.